You know, something strange happens every time crypto starts going up. Suddenly, everyone becomes a financial expert. Your barber starts talking about blockchain. Your cousin who used to ask you how to reset his Wi-Fi suddenly has strong opinions about decentralized finance. And that one friend who once bought a fake pair of AirPods on eBay is now explaining market cycles like he works at a hedge fund. Welcome to the world of crypto, where fortunes can appear overnight, disappear overnight, and somehow everyone still thinks they're the smartest investor in the room. Every crypto cycle produces the same characters. There's always the guy who claims he knew about Bitcoin in the early days. You've met him before. When prices go up, he appears out of nowhere and says, "Man, I was talking about Bitcoin back in 2012. But when you ask him how much he owns, the story suddenly changes. He says something like, "Well, I had some, but I sold it in 2013 to buy a PlayStation." Incredible. According to this guy, he could have been a billionaire today, but the PlayStation deal was just too good to pass up. And of course, this type of investor always speaks with perfect hindsight. They always say things like, "If I had just held." Yes, if everyone had just held their Bitcoin from the beginning, half the planet would be retired right now. Then there's the phase when crypto is completely ignored. This is when prices crash and suddenly everyone becomes a skeptic. Headlines start appearing everywhere saying things like, "Bitcoin is finished," or "The crypto bubble has finally burst." Social media goes quiet. Influencers disappear. The same people who were bragging about profits a few months ago are suddenly nowhere to be found. But interestingly enough, this is usually the moment when the smartest investors quietly start paying attention again. While everyone else is declaring crypto dead for the 100th time, they're slowly accumulating. After that comes the quiet comeback. Prices begin creeping up again, but no one really notices. Bitcoin moves a little higher, then a little higher again. At this stage, people begin to feel curious, but still hesitant. They start saying things like, "Maybe I should buy some crypto again." But they don't actually do it. They wait. Humans have a remarkable talent for waiting until an investment becomes expensive before deciding it looks like a great idea. Eventually, the market explodes upward, and that's when the real madness begins. This is the moment when fear of missing out spreads like wildfire. Your group chats suddenly turn into trading floors. People start asking questions like, "Is it too late to buy?" Or "Do you think this coin can go up another 1,000%? Suddenly, everyone has a strategy. Everyone has a prediction. Everyone knows exactly what the market will do next. The funny thing is that most of these predictions are completely opposite. One person says Bitcoin is going to $1 million. Another says the whole market is about to collapse. And somehow both of them say it with the confidence of someone announcing tomorrow's weather. At the peak of this excitement, something even stranger happens. The meme coins arrive. These are cryptocurrencies that often start as jokes, yet somehow end up becoming billion-dollar assets. One week the internet is talking about Dogecoin. The next week it's Shiba Inu. Then something even more ridiculous appears, maybe a coin inspired by a frog meme or a dog wearing sunglasses. And unbelievably, sometimes these coins explode in value faster than serious technology projects that took years to build. It's one of the most bizarre features of the crypto market. Logic and market behavior occasionally take a vacation while internet culture runs the show. But just as quickly as the excitement builds, reality eventually returns. Prices start dropping. At first, people say it's just a small correction. Then the drop gets bigger and bigger. Soon, the same investors who were shouting about the moon a few weeks earlier are suddenly quiet again. Social media feeds become less enthusiastic. Crypto influencers begin posting motivational quotes instead of price predictions. And eventually the cycle resets, waiting patiently for the next wave of excitement. The reason this cycle keeps repeating has a lot to do with human psychology. When people see someone turn a small investment into a massive profit, it triggers a powerful emotional reaction. It makes them imagine that the same thing could happen to them. But what they usually don't see are the countless people who lost money trying to chase the same opportunity. Stories about success travel much faster than stories about losses. Another powerful force is fear of missing out. When everyone around you seems to be making money, it becomes very difficult to stay calm and rational. Your brain starts telling you that you're the only person not participating, and that pressure can lead people to invest in things they barely understand. That's how people end up buying tokens with names that sound like jokes, hoping they've discovered the next hidden fortune. Despite all the chaos, crypto is still one of the most fascinating financial experiments ever created. It combines groundbreaking technology with some of the most unpredictable markets in modern history. Some projects are genuinely trying to transform finance, digital ownership, and the internet itself. Others exist purely because someone made a funny logo and convinced thousands of people it might go up in price. The real challenge for investors is learning how to separate the noise from the opportunity. The loudest voices in the market are rarely the most reliable. The people who tend to succeed over the long term are usually the ones doing quiet research while everyone else is chasing the latest hype. They understand that markets move in cycles, emotions drive decisions, and patience often beats excitement. So the next time someone confidently tells you they've found the next cryptocurrency that will change your life, take a moment before believing the story. Ask a few questions. Look at the technology. Consider the timing. Because in crypto, the difference between a brilliant investment and an expensive lesson often comes down to one simple thing: whether you're early or whether you're the person buying from someone who was.